Good morning, Honorable Chair. I rise to report that a quorum does exist for the Standing Committee on Public Enterprises Committee to commence business.
Thank you, my able clerk. It has been reported that a quorum does exist for the Standing Committee on Public Enterprise to commence business. Those in favor, please say aye.
Aye.
Those not in favor, please say no. The ayes have it. Thank you so much. First of all, I want to seize this opportunity to formally thank Nawec for coming to answer to the Standing Committee on Public Enterprise of the National Assembly of the Gambia. And I also want to extend my gratitude to the members of this noble committee, the clerk, and all the support staffs with the media team that are here. Good morning to you all. First of all, before we proceed in further expression, I would like us to do an individual introduction so that we can know one another who is here. I will start with my humble self. I'm Honorable Lamin Jesane, National Assembly Member for Brikama South, the chairman of this committee. Am I?
Good morning. I am Honorable Amman Jiba, Fonyi Councillor, member of this committee.
Good morning, Honorable Sir, Usual Constituency member.
Do I allow that a bit? Your voice a bit?
Honorable Abdullah Njai, Bayou Center.
Okay.
Sorry.
My name is Panso.
Manny Robert said it, Chief Operations Officer for the Water Services Business Nawec.
Okay.
Good morning, my name is Bessie Maron. I'm the Finance Director.
Good morning. Nani Guara, the Media Director Nawec.
Good morning, I'm Usman Rukyan, Chairman of the Board of Directors.
Good morning, I am Nungu Kure, Board Member Nawec.
Good morning, I'm Brenda Sakare, External Auditor, TV Associates.
Sorry.
Good morning, Martin Sam, Senior Manager for Resolution Affairs Nawec.
Good morning, my name is Isya Williams. I'm the Audit Director of
Good morning, my name is Mr. Trey, Corporate Services Director of Nawec.
Good morning, my name is Mohamed Kam, Financial Controller and Nawec.
Thank you so much. Honorable, you introduce yourself.
All right. So, Mr. Chair, sorry for coming late. As I explained to you, I had a little time, so as I was working. Good morning. I am Lami, member of Payable.
Aliwa.
Good morning. My name is Halima Mutamba, a clerk to this committee.
Good morning once again. I am Ibrahim Ajao, a clerk to the committee.
Good morning. My name is Fatma Takeda, clerk to this committee.
No, you don't need to look since they are all around. You can go to the administration of the oath.
You can inform them.
Yeah, let me inform them.
They proceed. Hold presenters. Everyone will be making a submission.
Thank you so much, MD and the team. Today we are in receipt of 2017, 2018, and 2019 activity report, financial statement, and management letter for these 3 years. So now we want to do an administration of oath. Anybody that is going to do the presentation with regards to the annual report, financial statement, and management letter, we want them to, the clerk will administer the oath for them. So we want you to give us the name of those people so that we can start with that first before we do the presentation. And our approach here since we have 2017, 2018, we want to have an activity report from 2017 to 2019. But for the financial statement, since they are interlinked, so we can start with 2018 and 2019, after which you will be back here for our consideration and approval. So if you can give us the name of the people that are going to do the administration of the office. Okay. Good, yeah. It's coming.
I, Nani Dwara,
do hereby affirm that
I will speak the truth, the whole truth,
nothing but the truth.
nothing but the truth. So help me Allah.
I, Betty Maro, do hereby affirm that I will speak the truth, the whole truth, nothing but the truth. So help me Allah. I hereby affirm that I will speak the truth, the whole truth, nothing but the truth. Hereby affirm that I will speak the whole truth, nothing but the truth. So help me Allah.
Yes, it's done now. Let me also ask the approach.
Yes, exactly.
But you don't have the Quran with you.
Yes, as an affirmation.
Okay.
You know,
Okay.
and then affirmation.
Thank you so much. First, MD and the senior management, I would like to inquire whether you have a summary of the reports, because already we have all the reports with us, whether you have a summary that you want to use to present. If you don't have that, whether you are going through the whole booklet to do the presentation. But I want the presenter to refer us to a specific page wherever you want to do, so that the members can be at the same wavelength with you in terms of the paging and understanding. Starting with 2017.
Yeah.
Yes?
I'm sorry because the approaches are different.
Okay.
We've been presenting here in the past, but this year's approach is different from the past. So when I was coming, I didn't prepare to go through the entire report.
Okay.
Proposed by you have.
No. Maybe you didn't get me. I mean, if you have a report, a summary of the report.
I decided to just have a statement which is highlighting the main activities.
Okay, I think this is what we are looking for. I think that's good.
Exactly. So I might not be able to at the same time be referring to the pages because I just did a summary. We did not state exactly on which page you have
And
the details are all contained in the report.
okay, thank you so much. After the presentation, you can supply us the copy so that we can photocopy.
It's not going to be different because it's just a statement that I have
Okay.
in the report
Okay.
that I'm going to read out.
Okay.
So it's the same as it's contained in the report.
Okay. Thank you so much. Let's start.
Good morning. Thank you very much, Honorable Chair, distinguished committee members, senior management of Nawec, the external auditor, the chairperson and board members of Nawec. It's indeed a pleasure to be present here today to present our 2017, 2018, and 2019 audited financial statements and activity reports for the 3 years. As you can see, the reports were all submitted in the past, sometime in 2021. But unfortunately, we could not do the presentation simply because we were in a backlog. The reports were not submitted as and when they were due because of some of the challenges that we had in the past. And that's why we have the 3 years today that we are presenting to the committee. So first, I'll start with 2017. I'll just go through to make just to state the main highlights of the year in terms of the activities that we have undertaken during 2017. In 2017, we continue to deliver on our financial and operational objectives, and we have positioned ourselves to solely focus on the supply of power and water to the entire country. Of course, this requires continuous strategizing of our activities by refocusing on our development of our power infrastructure, improving the existing network to meet the demand of the people. Of course, during 2017, we have realized that there has been an increase in demand, which was not met by the supply. I think 2017 was no secret to anybody in this country when we had change of government. The utility faced a lot of challenges during this period because at the time, the demand for our service was higher than the supply that we could provide. In fact, we were at a point of almost in crisis in 2017 because the available generation capacity at the time was only up to about 27 megawatts, as opposed to the peak load demand of about 70 megawatts. This has brought in a lot of challenges for not only Nawec, but for the new government that took over in 2017. However, efforts were put in place to be able to address some of these issues in the short term through the support of our partners, mainly the World Bank. We were able to embark on some rehabilitation activities and maintenance of some of our generating sets in order to stabilize the power supply situation in the short run, whilst we work on the long-term and medium-term investment requirements for the sector. So in 2017, basically, it was a crisis management situation for us. But thanks to the support that we received from government through our development partners, we were able to stabilize and improve on the supplies. The main highlights, especially when it comes to our rural operations, was the interconnection between Senegal and the Gambia in the North Bank region of the Gambia. For the first time, we were able to interconnect with Senegal by providing 24 hours electricity supply in part of North Bank region, mainly from Ker Ayub covering the Farafenye and also the LRR subsystems. So 2017, the main highlights mainly has to do with a lot of efforts in improving the generation capacity and also also trying to improve on our rural operations. And we were able to interconnect with Senelec. And for the first time in the history of that region also, we were able to provide 24 hours electricity supply. And in the past, those communities were only enjoying nothing more than 9 hours. And in some instances, they got weeks without electricity at all. So the interventions in 2017 were indeed very helpful. The situation was not different in 2018 as well. We had similar challenges, just like in 2017, but through the interventions of the World Bank and other donors partners, we were able to rehabilitate at least 3 generators that were out of service for more than 2 years. One, because of budgetary constraints that the utility was facing at the time, and also other challenges in terms of the availability of spare parts, because some of these gensets are very old. We find it extremely difficult even to source some of these spare parts in the market. But nonetheless, through funding from the World Bank, 2 of the generators were completely rehabilitated. And one of the gensets, which was a new one at the time before it got a major mechanical breakdown, which we call the Watsila generator, that is at Brikama 2. It has a major breakdown in 2017. Thanks to the support of the bank, we were able to replace this generator to a brand new one. And it also started operations in 2018. At the same time, we were also on an ongoing project, which is the generator that we call generator number 5 at the Koto Power Station, which was funded through the Islamic Development Bank, through Audited and Badia. The funding is funding from Audited and Badia. This generator was commissioned in August 2018. So with the availability of this genset, we were in a better position at the time in 2018 to be able to meet our demand, coupled with the signing of a contract with Car Power also in 2018. I think all of you were aware in 2018, due to the demand-supply gap, government decided that we have to enter into a short-term power purchase agreement with Car Power. It's a Turkish company and it's located currently in Banjul here, supplying power within the GBA. The contract was signed and it became effective 1st May of 2018. So when we had this Car Power commissioned and made available and started operating in the Gambia, we were able to meet the demand, and to the extent that we even had some spinning reserve. And that has really helped a lot, and we had greater stability in 2018 going 2019. Those were the main highlights. And also in 2018, we also expanded our partnership with Senelec in the North Bank region, where we covered the Amdalai current connection, that where we have the interconnection between Senelec and Nawec in Amdalai as well. Also providing up to about 3 megawatts to the Nyomis, which were not covered in the initial interconnection. And also for the first time, those communities have also started realizing stable and relatively 24 hours electricity supply, as opposed to the erratic nature that was there before the coming of that interconnection facility. Going into 2019, a lot of effort have been put in place in the sense that the focus of management was mainly to consolidate the gains that we have already registered in the power supply since the change of government in 2017. The demand on the services continued to increase significantly because of the booming construction industry and the increase in business activity after the democratic change of government. Despite the huge increase in demand, which was unfortunately not matched by the available generation capacity due to some of the old age of some of the generators, Nawec was still able to maintain relative stability in most part of 2019. In 2019, management was able to increase electricity production from 327 megawatts in 2018 to 380,371 megawatts in 2019, representing an increase of about 16.30%. This is possible thanks to the continuous availability of the car power ship, which started operations in 2018, and also the availability of the new generator at Kotu Power Station, which was funded through the Audited and MEDIA. The main challenge, of course, that Nawec faced during this year under review in terms of generation capacity availability is delay in the delivery of spare parts for the required scheduled maintenance due to budgetary constraints. The wear and tear of most of the old gensets continue to increase, and it was extremely difficult to source genuine parts overseas, as some of these parts are no more available or manufactured. To maintain system stability and improve quality of service, management embarked on a series of interventions on our transmission and distribution network, such as the upgrading of the overloaded secondary transformers, installation of new secondary transformers in areas where the demand was on the increase, and the cables or the transformers were overloaded, and some of the conductors were also bare and were causing a lot of energy loss. So we have replaced some of those bare conductors to insulated ones to minimize the energy losses. Cognizant of the low level of access to electricity service countrywide, management, with the support of the government, started the implementation of the electricity expansion project, which we call EEP. This is a project that is funded by the Exim Bank of India at a tune of about $22.5 million US. The scope of this project includes the electrification of over 77 communities, both within the Greater Banjul area and, of course, for the first time, in the Kiangs. So thanks to the support, and then let me say this, I'm sure I might be scolded, but the managing director at the time for this project was the Badibunka. So the Kiangas were supported, and then for the first time they have also started enjoying electricity supply in those communities. The project, when completed, will definitely change the lives and livelihoods of those beneficiary communities, and this, for the first time, would also create business opportunity for the communities that have been served. In terms of water supply, it's no secret, the challenges are enormous. The demand far outweighs the supply, and there is the need for significant improvement in terms of our production capacity and also the upgrade of our existing network. So in the Greater Banjul area in particular, we have communities that go for days without water supply. Some they go for hours without water supply, simply because we don't have adequate production capacity, and we have a lot of bottlenecks on our existing network as well. However, in order to close that gap, through the support of the Gambia government, we've also started the implementation of about of a project funded through the same Exim Bank of India at a tune of about $22.5 million. The main objective of the project was to replace the existing asbestos pipes within the Greater Banjul area and also part of North Bank region. So works on this project, of course, we are reporting in the past, but it's now completed. Most of the infrastructure is in place, and the facilities are all commissioned now. So it has helped to at least close the gap, but notwithstanding, we still have significant gaps in terms of demand and supply. Still now communities are going without water for some hours, and in other instances for some days, which is still a very serious challenge. The main highlights in reforming our finances in 2019 was a debt restructuring arrangement entered between Nawec and the Gambia government. About 75% of our debt, which are mainly investment loans contracted by Gambia government on behalf of Nawec, 75% of them have been taken over by government in order to help Nawec to sanitize our balance sheet. This has significantly reduced our debt obligations and will help us in attracting private sector investment in this sector, because this has always been the challenge for Nawec to attract investment into company, because if they look at our books, it becomes no more attractive for private people to come and invest in order to improve our electricity subsector. But after government's intervention, we have now seen a lot of interest coming from the private players, especially those who are interested in IPPs. The audit of our 2019 financial statement was delayed mainly due to previous year's backlog, which was due to lack of integrated information management system at Nawec. In the past, I think it's just recent that we have just implemented the integrated management system, the IMS. In the past, we have a lot of standalone IT systems. The finance system, the accounting system was a standalone, billing system was a standalone, stores, and a host of IT systems were all standalone in the past. And that has been a major challenge for Nawec when it comes to the preparation of our reports on time. But thank God, as we speak, we have the IMS already in place. This was since October of 2021. This will significantly help us to reduce the delays in the preparation of our reports. And hopefully, going forward, after the submission of our 2020 and 2021 audited and financial statements for 2021 and 2020, then we don't anticipate to have any more backlogs. Over the years, management have been struggling with several standalone systems, as I said earlier. I think we'll call that a history, or it's going to be history going forward, as most of those manual activities will now be digitized. Our monthly reconciliation also will be done on time, and the risk that is associated with delay in bank reconciliation will also be resolved. This project was funded through the World Bank as well. It was supported by the World Bank through the government of the Gambia, and it is now been fully commissioned, and where the team, the system is in full operations. Finally, with the support of our development partners, government, and board of directors of Nawec, management initiated an organizational restructuring process to ensure that we have the right skills in the right positions, so that we can manage this institution more effectively, and also help to address some of the challenges that we face today. We used to have an organizational structure where we have almost about 12 directors. This has now been reduced to 8. And we are happy to also announce today that 50% of our senior management are female. And this is part of the reform process that we have embarked upon as a utility, just to make sure we have that gender parity, and also to give similar similar opportunities to our female folk, because we feel that we are partners in development. On that note, I thank the chair for the opportunity, and wishing all of us fruitful deliberations for the day. Thank you.
Thank you so much, MD, for that explicit report. My senior board chairman, who is going to be your next person with regards to the management letter on the finance system?
The finance director will do the management letter and the financial statement. So, but we will want to allow our chair also to say something.
Okay.
If you don't mind that.
Okay.
So I can put it here.
Mr. Chairman, members of the distinguished August body, board colleague, staff of Nawec. Mr. Chairman, you've heard the managing director mention the issue of crisis. We took over as a board in 2019,
and we found them in the crisis mode. One of the first things that we wanted to find out was what is the internal competence of the organization. And the trajectory that was set with the ambitious goal of reaching 75% of the population of the Gambia by 2025 needs to have the kind of competence in-house to be able to deliver. This resulted, as the MD said, into the restructuring of Nawec, bringing in the kind of competence we believe could deliver the goods. In recognition of the critical role that Nawec could play in the economic advancement of this country, we find this not only as a compliance issue, but an issue to ensure that we hold ourselves accountable and hold the management accountable to discharge the mandate that Nawec had been given. In that regard, I want before you to thank the government of the Gambia for supporting us to clear out some of the horrendous debts that we inherited as a company. It is very interesting to note that we have excellent doers in Nawec. They are important in terms of delivering the services, because whatever we do, what people want is, where is the electricity? Where is the water? And Nawec had been very biased towards electricity, and water was not, as I would say, a major priority. It was a priority, but electricity was a priority of priorities. So as a result, the concentration was on that. However, this set of mind had to be changed, and we pushed for that by bringing in the required competence in that area also to help us deliver. It became very clear that the organization is moving in a way that needs to be guided, and which I think we have been successful in terms of bringing some coherent way of thinking about the expansion of the project and the rapid population growth, especially in the urban area, in the greater Banjul area. That in itself was a major challenge that we faced. So for us, we are moving in the right direction with the support of the donors and with the support of the central government. We have moved a step further towards progress. When we took over, we found out the finances, the accounts were in actually samples. 2016 report, when I read it, that was my first time in my 40 years of experience to see that kind of a report. We insisted that we need to sanitize our accounts, not only to comply with the requirements or the fiduciary requirements, but to discharge our fiduciary responsibility in a way that we will satisfy the Gambian people, and also the donors need to respect us because we have to build that kind of track record. In doing that, we had to spend a lot of time and money with the help of our auditors to sanitize our accounts so that they can provide a coherent account that will be recognized by anybody who is interested to work with Nawec. So this is the direction that we have, and we have by 2019, end of 2019 to 2020, which will be sent to you later, we have worked out in such a way that our accounts could make real sense. This was a problem because over the years, not the fault of those people who are working in the accounts department, but the way government interference was getting into Nawec. And as a result, nothing was working on in a way professional accounts will require that to happen. Thank God, with the advent of the new political dispensation, this has been a thing of the past. We continue to do this for this discharge our fiduciary responsibility to ensure that we provide the kind of service that the Gambian people expect from us. Thank you very much.
Thank you so much,
Chairman.
Chairman. I just want to observe some procedural issues. Upon every presentation, I realize that people are clapping, and here clapping is not allowed. You must gently, huh? So let us all be fair with the procedures here. And we move to the next financial statement. Huh?
Thank you very much, Mr. Chairman. I would do as advised and present the income statement, balance sheet, and cash flow statement for 2018 and 2017 side by side. So if you open the 2018 financial statements, page 11. Sorry.
In the West End for 18 and 19.
No, 17 and 18 are in the same document.
There you go.
Okay, so that's page 11 of the financial statements of 2018. There you have 18 and 19 side by side, right?
Income statement, huh?
Yes. Yes, thank you very much. So I would not go into every detail. I guess you'll have time for that in your consideration or deliberations. I just wanted to present that in 2018, Nawec had a loss of $265 million, and in 2017, there's a slight profit of 18 million that was presented. I would like for you to take note of that because I would comment a little bit on these figures when we go to the statement of equity. So the next page, which is page 12, is where the statement of financial position, which is another way of saying balance sheet. Sorry.
Yes, I think with regards to the financial statement, if we can go in detail.
Okay.
Better, rather than look up only one line item. I want us to go in detail so that we can be appreciated.
What amount of details are you interested in? Because it's a very technical document. I can be flipping from the main statements to the notes.
I saw the main statement and the notes.
Yeah, they refer to the notes. So a detailed
If we go into the details, we'll never get out of it.
Yes, so then that would require members to have a look at this document and we go through it, then so that we can have such a presentation. But then if she could present as she is trying to do right now, when we haven't go through the document, we can't interact as we wish. So I would prefer we can go detail into, the technicalities we have, technicians there, probably take care of that. But if we can go detail into it, that would be able to prepare.
May I just comment on the fact, sorry, Mr. Chair.
Madam Finance Director, we want you to read everything before the head, since we have time. Then later we'll go through this thing by ourselves.
Okay. What I can try to do is help you on how to read this document. You will need to go and look at the details because these were submitted to you. I will help you on how to understand the document. You have technical people for this. But
the issue here is, since we are here, we have the statement before us. At our level, we're going to look at it at our own level.
Okay.
And during the consideration, we'll come out with the corrections.
Okay.
For that verify.
All right.
What we need right now, we want you to go through these things. Item by item, so that it enables us to have a better understanding.
Let's give it a try. Sorry.
Maybe you don't have by the chairs. The purpose of us being here is to streamline and have it done. Don't mind about time. What we are here for, if you could do it as better as we can. That is the purpose why we are here. We want to really look at it, go through it vividly. Then the rest will be on us. So
okay.
Maybe same line what we could give on, and the rest will be done on us.
I'll do that.
Means we are not presenting. We only doing what we think is viable to us. A standing committee, we have time. We can still be here in the evening. So far, the purpose of this is met.
That is noted.
So I think let's do ourselves justice.
Okay.
Whatever we think is right.
That is well understood and heard. I will start with the income statement and go as detailed as possible. So the financial statement is presented in such a way that, so you have the revenue line and we'll do 20, do you want me to do 2018 and 2019 concurrently for every item, or 2017 first and go back? I can do both, yes, okay. So revenue for 2017 was $2.8 billion, and the revenue for 2019 presented was $3.2 billion. So the details of what is included in these numbers can be found on page 17, note 2. A breakdown of what is in the revenue of 3.2 billion and 2.8 billion respectively. If you go to
what do? You go and you go to the next one. Just line by line, then after you go to the next one.
Madam Finance Director.
Yes.
We want you to read everything that is on
that page.
Statement here.
How do you
we want to hear everything from you as you are presenting how it is captured.
Yeah, that's what I'm trying to do. But do you want me to just read one page until it's done and come to other? Because that is not the normal way of reading a financial statement, but I will go ahead. Okay, thank you.
We are dealing with a standing committee that is required to conduct an oversight of all the fees in this country.
Okay.
So if we come to the area of financial statement, we give us as how it is
read. Fantastic.
And the rest is left with us for us to do.
Okay.
Probably
yes.
You want to go up to that professional level. We also have our way of doing it. Let's do it how it is captured here.
I'll start to be guided.
Yeah.
So the cost of sales is for 2017 is $1,548,67 $1,000. Page 11.
On the income statement.
And for the cost of sales for 2018 is $2,277,044,000. That's 2.3 billion. So the gross profit, which is the sum of the revenue and the cost of sales for 2017, is 1271230. In thousands, that is 1.2 billion. The gross profit for 2018 is 948,393. That is $948 million. The administration cost for Nawec for 2017 is 629,834. And for 2018 is 747,448. That is in millions. The depreciation charge for 2017 is 320,471,000. For 2018, the same figure, depreciation charge is 338,101. Release of capital grants for 2017 is 21627, which is an income, and for 2018, 21627, which is also an income. Other operating income for 2017 is 16032, and for 2018 is 49213. The net operating expenses for 2017 is minus 912,646 million, or thousand, sorry, and minus, for 2018, minus 1,014,707,000. The operating loss for the company in 2017 is 358,584 positive. The operating loss for 2018 is negative 66,316. Total interest expense and similar charges for 2017 is 241,121. For 2018 is 177,761. The net loss gain related to foreign exchange for 2017 is negative 99300, and for 2018 it's negative 21711. That gives a profit for the year in 2017 of 18163,000, and a loss for 2018 of minus 265,788. The next is the statement of financial positions, which is also known as the balance sheet. And I present the assets first. The property, plant, and equipment for 2017 is 5219439. For 2018 is 5989120. Intangible assets for 2017 is 5655. For 2018 is 4203, giving a total of non-current assets of 5225094 in 2017 and 5993323 in 2018. The current assets Inventory for 2017 is 616,823. For 2018 is 708,709. Trade and other receivables for 2017 is 977,850. For 2018 is 102,736. Cash at hand and in bank for 2017 is 146,087, and in 2018 is 209,065, giving a total of current assets for 2017 of 174,0760 and 1945010 for 2018. Total assets for the year 2017 is 6965855, and for 2018 is 7938333. The next item on the statement of financial position is the equity and liability. The share capital for Nawec in 2017 was 68466. That amount is unchanged for 2018, 68466. The revaluation reserve for 2017 is 1581375. The amount is also unchanged in 2018. It's 1581375. Retained earnings for 2017 is minus or negative 5831730. Sorry, 5831730. For 2018, the amount is a negative 6406439, giving a total equity of negative 4181889 in 2017 and negative 4756598 in 2018. Deferred capital grants in 2017 was 553032, and in 2018 531405. Total borrowings for 2017 was 8692699, and for 2018 9578753. That gives a total non-current asset balance for 2017 of 9245731, and for 2018 101105158. Current liabilities. The trade and other payables for 2017 was 1350504. For 2018, it was 1986282. Short-term loans for 2017 was 521621 and 561999 in 2018. Bank overdrafts for 2017 was 29887, and for 2018 136492. That gives a total current liabilities of 1902012 for 2017 and 2584773 for 2018, giving a total equity and liabilities of 6965855 for 2017 and 7938333 for 2018. The next is the statement of change in equity, which is the breakdown of the equity that we have presented in the statement of financial position. As of 1st of January 2017, the share capital as presented in the page before was 68,466. The revaluation reserve was 1581375. The retained earnings was negative 5696306. The profit for the year 2018 as presented earlier was 18168, and prior year adjustments of negative 153 589, bringing the total retained earnings as presented earlier to 5831727. That the closing balance for 2017 also serves as the opening balance for 2018. And as presented earlier, there were no changes in 2018 as far as share capital and evaluation reserves were concerned. There was a loss of negative 265,788 as presented earlier, and adjustments in reserve of negative 308,929. Bringing the total retained earnings to negative 6406439 as presented earlier, and a total equity of negative 4756598 for 2018 and negative 4181886 for 2017. The next is the statement of cash flows. The cash flows from operating activities. The operating profit for 2017 was 358,584. For 2018, there was an operating loss of negative 66316. Prior year adjustments for 2017 was 2213, while in 2018, this was a negative 308924. Opening balance differences in 2017 was negative 153584, while there were no opening balance differences presented in 2018. The depreciation and amortization cost for 2017 was 320471. For 2018, it was 338101. The release of capital grant, as presented earlier, was 21627 in 2017 and 21627 in 2018. The change in working capital. Changes in inventory for 2017 was negative 201544, and for 2018, negative 91886. The changes in trade receivables for 2017 was negative 174126 and negative 49386 for 2018. The changes in trade payables was a positive 488123 in 2017 and 635780 for 2018. This gives cash flow generated from operations for 2017 of 618505, and for 2018 435,742. Total interest paid in 2017 was 241,121, and for 2018 was 177,761. The recognized exchange loss in 2017 was 99300, and for 2018, 21711. Net cash generated from operating activities sums up to 278,084 for 2017 and 236,270 for 2018. We move on to the cash flows from investing activities. The purchase of non-current assets in 2017 amounted to 607,063, and in 2018, 11,06330. Development fund for 2017 was 5500 and zero for 2018. Net cash used for investing activities in 2017 was 601564 and 1106330. Cash flow from financing activities. Loans received in 2017 was 400,386 and in 2018 826,433. That is the total cash generated from financial activities. Then we come to the summary of the cash and cash equivalent from the activities of the cash flow. In 2017, we had a positive cash flow of 76906, while in 2018 there was a negative cash flow of 43627. This gives the cash position at the end of the year for 2017 of 116,199, which is the opening balance for 2018, and the closing balance for 2018 being 72,572. That concludes the presentation of the main schedules of the financial statements. The rest is just details of what I have presented here.
Thank you so much, Madam Finance Director. Can we go to the next item now?
2019.
Yes. Before we can move on. We have some observations. Huh? It's okay.
So the income statement for 2019 is also on page 11 of the 2019.
Are you all there? Have you seen? Are you there? Let's go ahead.
Thank you. So the income statement for 2019. The revenue presented for the year 2019 was 3790769. The total cost of sales for 2019 was 3331033, giving a gross profit of 459736. The total administration cost for 2019 was 626984. The net effect of write-offs in 2019 was negative 221081. Total depreciation charged in 2019 was 802979. There was zero gains from disposal of fixed assets in 2019, while the release of capital grants in 2019 income was 21628. The other operating income amounted to 7760. This gave a net operating expenses of 16215,656, resulting in an operating loss of 1161920 for 2019. Interest and similar charges for 2019, interest expense and similar charges for 2019 was 179,188. interest income for 2019 was 1378. The net loss on foreign exchange transactions was 24374. This gives a total net financial loss of minus 202184 and a total loss for the year of minus 1364104. The next is the statement of financial position. For 2019, the total property, plant, and equipment amounted to 72,42107, intangible assets 2802. The total inventory for 2019 was 698,885. Trade and other payables for 2019 was 402,746. The cash at bank and on hand was 836,512. This gave a total assets for 2019 of 91,83052. The share capital for 2019 had increased to 2714357. The revaluation reserve for 2019 remained unchanged at 1581375. The retained earnings significantly improved to negative 2152499, giving a total positive equity of 2143233. Total non-current borrowings for 2019 was 4271605, and deferred capital grants was 509779. The current liabilities consist of trade and other payables of 1217801, short-term loans of 963372, and bank overdraft of 77262. The total equity and liabilities for 2019 was 9183,052. The next is the statement of change in equity. The share capital increased in 2019 by 2645802 to 2714357. The revaluation reserve remained unchanged at 1581375. The opening balance of retained earnings was a negative 406439. It was positively impacted by prior year adjustments of 685332 and a debt relief of 4932713. The loss for the year was 1364104, bringing the total retained earnings at the end of 2018 at negative 2152499 and a total equity positive of 2142233 in 2019. The statement of cash flows for 2019. The operating loss was a negative 1161920. Adjustments from prior year 685332. Reconciliations differences on property, plant, and equipment was a negative 835564. Depreciation and amortization for 2019 was 802979. Release of capital grant was 21623. Unrealized exchange gains was 24386. Changes in the working capital. Changes in inventory in 2019 was positive 9824. Changes in trade receivables was 624491. And changes in trade payables was 768479, giving a total cash generated from operations of a negative 689344. Interest paid in 2019 was 179188, giving a net cash generated from operating activities of negative 868534. Cash flow from investing activities. Purchase of non-current assets, 1219001. Interest received from cash collateral, 1378. Net cash used for investing activities, 1217623. Cash flows from financing activities. Loans received in 2019 was 2458150. Loan repayment was 7263922. Debt relief was 4932714. And deposit of shares is 2645890, giving a total net cash flow from financing activities of a positive 2772,832. This resulted in the increase of cash in hand of 686,676, giving a total cash equivalent balance at the end of 2019 of 759,250. Thank you very much.
Thank you so much for the Can we go to the next presenter?
With your permission, Mr. Chair, I would like to present the management letter for 2019. So the way the management letter is built up, issues that are not resolved from previous year will also be included in the latest version. So when we go through 2019, we will have all the current issues as of 2019. So we don't have to go back and read the same thing for 2018 and 2019. With your permission. Okay.
I think you cover from 2017 to 2019.
Okay, then I will hand over to the external auditor.
No.
Oh, you asked a question, sorry. What did you say?
My question is, does the management letter for 2019 cover all from 2017?
So it will cover the issues that are not resolved from the previous years. So what it does, it tells you the issue.
They don't present it. There is something you respond.
Then we need another.
You don't have no, you will be responding.
Okay.
Yeah.
Okay.
She will read, and then there's a response.
Yes. So I'm going to hand over to the auditor now. They'll do both the opinion and the management letter.
So what is
Good morning, Honorable Chair, Honorable Members.
I don't think it's on. I put it.
That's fine.
It's on.
Yeah.
Hello?
Yeah, it's on.
Good morning to you all, Honorable Chair, members, subject matter specialists,
board, management, and staff of Nawec. Can I please refer you to the financial statements for the year ended 31st December 2017? The auditor's report will be on page 6. And Honorable Chair, with your permission, I will read the summarized version.
Page 6, huh?
Yes.
Yeah.
Is the annual report and financial statement.
Are you all in charge? Let's go ahead.
Independent Auditor's Report to the members of National Water and Electricity Company Limited, Nawec. Qualified opinion. We have audited the financial statements of National Water and Electricity Company Limited, Nawec, set out on pages 10 to 26, which comprise the statement of financial position as at 31st December 2017, and the statement of profit or loss, statement of changes in equity, and statement of cash flows for the year then ended, and notes to the financial statements, including a summary of significant accounting policies. In our opinion, except for the effects of the matters described in the basis for qualified opinion section of our report, the financial statements present fairly the financial position of National Water and Electricity Company Limited, Nawec, as at 31st December 2017, and its financial performance and cash flows for the year then ended in accordance with generally accepted accounting principles, GAAP, and in the manner required by the Companies Act 2013. Basis for qualified opinion. We conducted our audit in accordance with international standards on auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities. I'll skip that and go to qualified opinion. The prior year financial statements were also qualified with respect to the matters below. Inventory, as detailed in note 12 of the financial statements, inventory is stated at carrying value of 616.8 million as at 31st December 2017. From our audit work, we noted a difference of $4.9 million between the stock valuation report and the general ledger balance. The difference was not supported, reconciled, or corrected by management. Due to the above, we could not ascertain the valuation and existence of the inventory balance in the financial statements. Consequently, we could not determine the possible adjustments, if any, that might have been necessary for the year then ended 31st December 2017. Borrowings. $9.2 billion is reported as long-term loans in note 15 of the financial statements. $5.4 billion of this balance could not be supported either through independent direct confirmations by us or loan agreements. Without sufficient evidence from management, we were unable to ascertain the completeness, existence, and valuation of the unsupported loan balance. Cash and bank. The company reported cash balance of $146.1 million and overdrawn bank balance of $29.9 million, as detailed in note 19 of the financial statements. From our audit tests on cash and bank balances, we noted long reconciling items in the bank reconciliation amounting to $288.8 million that were not cleared or supported up to the time of reporting. We were therefore unable to confirm the completeness and valuation of the cash balances. If these reconciling items are adjusted, it is likely to affect other account balances in the financial statement. Opening balance differences. During our review of the retained earnings opening balance, we noted that there was a difference of 153.6 million between the previous year's audited accounts closing balance and the current year's opening balance. Management provided us with adjustments relating to these differences. However, these adjustments could not be adequately supported. We are thus unable to confirm the valuation of the opening balance. Material uncertainty relating to going concern. We draw attention to note 18 in the financial statements, which indicates that the company incurred cumulative losses of $5.8 billion as at the year end, negative net assets of $4.2 billion, and equal deficit in shareholders' equity. These conditions, as set forth in the financial statements, indicate the existence of uncertainty regarding the company's ability to continue as a going concern and increase liquidity risk. The government of the Gambia, through its representative, the Ministry of Finance, has signed a memorandum on 9 March 2018 to assume responsibility for 77.5% of the loans to enable the entity to continue to operate and meet its obligations. Our opinion is not qualified in respect of this matter. Our audit opinion was signed DT Associate Chartered Accountants, Registered Auditors, partner Ajipenda Sankare, dated 26th of November 2019. Thank you. So, can I move on to 2018? May I move on to 2018? The opinion is on page 7. Can I move on? 2018. Can I proceed? Okay. Independent Auditors Report to the members of National Water and Electricity Company, Nawec. Disclaimer of opinion. We have audited the financial statements of National Water and Electricity Company Limited for the year ended 31st December 2018, set out on pages 11 to 26, which comprise the statement of financial position as of 31st December 2018, and the income statement, statement of changes in equity, and statement of cash flows for the year then ended, and notes to the financial statements, including a summary of significant accounting policies. We do not express an opinion on the accompanying financial statements of the company because of the significance of the matter described in the basis for disclaimer of opinion section of our report. We have not been able to obtain sufficient appropriate audit evidence to provide a basis for an audit opinion on these financial statements. Basis for disclaimer of opinion. Comparative financial information. Comparatives presented in these financial statements are those figures reported in the previous year's financial statements. In our report dated 26 November 2019, we issued a qualified opinion on those financial statements as we could not ascertain adequate evidences on the following account balances: inventory, borrowings, cash and bank, opening balances differences. We were unable to obtain sufficient appropriate audit evidence regarding these matters by alternative means. Since opening inventories, borrowings, cash and bank, and retained earnings enter into the determination of the financial performance and cash flows for the current year, we were unable to determine whether adjustments might be necessary to provide for the year ended 31st December 2017 reported in the Statement of Comprehensive Income and to the net cash flows from operating activities reported in the Statement of Cash Flows. Furthermore, our opinion on the current year's financial position is qualified because of the possible effect of this matter on the comparability of the current year's financial position with that of the prior year. Receivables, as detailed in note 13 of these financial statements, net receivable balance was 127.24 million at the year ended. During our test, we could not confirm the valuation of receivable balances amounting to 229 million due to absence of evidence relating to invoices issued and payments made by customers. These balances could therefore not be substantiated for our review. Trade and other payables. Note 14 of the financial statements included creditors of 1,239 million. We sent confirmations to a sample of payables and noted differences between the balance recorded on the general ledger and reply received from Gambia National Petroleum Corporation as detailed below. The supplier name was GNPC. The GL amount was 691 billion. The confirmed amount was 758 million, and there was a difference of $67.5 million. The difference of $67.58 million was not reconciled or adequately supported. We therefore could not ascertain the completeness and valuation of the trade creditors balance reported in the financial statements. Other accruals. Note 14 of the financial statements included other accruals of 110.13 million. The breakdown was not provided for our review. Without relevant and sufficient evidence from management, we were unable to ascertain completeness of the account balance. Cash and bank. The company reported cash and balance of 207.9 million and overdrawn balance of 136.5 million as detailed in note 19 of the financial statement. From our audit test on cash and balances, we note cash and bank balances. We noted long reconciling items in the bank reconciliation items amounting to 177.8 million that were not cleared or adequately supported. We were unable to confirm the completeness and valuation of the cash balances. If these reconciling items are adjusted, it is likely to affect other account balances in the financial statement. Revenue. Included in note 2 of the financial statements is revenue of 3,225.44 million. Of this amount, 3,058 million related to revenue from billing. During our test on revenue relating to electricity and water sales, we noted a difference of 93.9 million and 79.3 million respectively between our expectation and the amounts recorded in the general ledger. The difference was not reconciled or supported. We could not perform further necessary audit tests as the current billing system had limitations in providing historic records relating to the transactions previously posted in the general ledger in 2018. Retained earnings. We encountered limitation in ascertaining the completeness and valuation of the closing retained earnings balance of 6,406.4 million recorded in note 18 of these financial statements, as adequate supporting documents for the adjustments posted in the reserve amounting to 308.9 million was not provided for our review. There were no other audit procedures we could adopt to ascertain the completeness and valuation of this account balance. Material uncertainty related to going concern. We draw attention to note 18 in the financial statements, which indicates that the company incurred cumulative losses at the year end 31st December 2018 of 6.4 billion negative, net assets of 4.7 billion, and equal deficit in shareholders' equity. These conditions are set forth in the financial statements, indicate the existence of uncertainty regarding the company's ability to continue as a going concern and increase liquidity risk. Signed on page 10, DT Associates, dated 26 February 2021. Thank you.
Thank you. 2019.
2019, same page 7. It's a disclaimer of opinion. We have audited the financial statements of National Water and Electricity Company Limited for the year ended 31st December 2019, set out on pages 11 to 30, which comprise the statement of financial position as of 31st December 2019 and the income statement changes or statement of changes in equity and statement of cash flows for the year then ended, and notes to the financial statements, including a summary of significant accounting policies. We do not express an opinion on the accompanying financial statements of the company because of the significance of the matter described in the basis for disclaimer of opinion section of our report. We have not been able to obtain sufficient appropriate audit evidence to provide basis for an audit opinion on these financial statements. Basis for disclaimer of opinion. Comparative financial information. Comparatives presented in these financial statements are those figures reported in the previous year's financial statements. In our report dated 26 February 2021, we issued a disclaimer of opinion on those financial statements as we could not ascertain adequate audit evidences in the following account balances: cash and bank receivables, payables, revenue, retained earnings. We were unable to obtain sufficient appropriate audit evidence regarding these matters by alternative means. And revenue. Note 2 of the financial statements detail total revenue of $3.8 billion. Of this amount, $3.6 billion related to revenue from billing both electricity and water services. We noted a difference of $199.4 million from our expectation for electricity sales, which was not reconciled or supported by management. We also requested for further information in the form of logbooks to perform alternative audit tests. However, management had a limitation in providing logbooks to support electricity bills raised in 2019. Consequently, we were unable to verify the completeness and accuracy of the revenue account balance recorded in these financial statements. We also encountered limitations in obtaining adequate supporting evidences for revenue relating to Ajib Nawec service connections amounting to $10.6 million, included in service connection income of $759 million under Note 2 of the financial statements. Cost of sales. Note 3 of the financial statements reported $3.3 billion as total cost of sales. Adjustments totaling $134.8 million were posted into the cost of sales account balance. Appropriate supporting evidence for these support postings were not provided for our review. This resulted in limitation in ascertaining the completeness and accuracy of this posting, and there were no alternative audit procedures we could adopt. Trade receivable. Note 16 of these financial statements related to total trade receivable balance of $402.7 million. We could not confirm the valuation of this balance as we were not provided with appropriate supporting evidence for sample of trade debtors amounting to $159.8 million. Third-party confirmations were also sent, but replies were not received for the sample selected. We were also not provided with appropriate supporting evidences for Ajib loan service connection of $19.6 million, Gambia government loan of $5.5 million, and other receivable of $7.9 million included in Note 17 of the financial statement. Consequently, there were no alternative procedures to confirm the valuation of the trade receivable balance reported in the financial statements. Trade and other payables. Trade and other payables as listed in Note 17 of these financial statements with a closing balance of $1.2 billion includes a balance of $1.1 billion relating to trade payables. We were unable to confirm the completeness and valuation of this balance as the listing provided to us included a balance of $34.7 million which could not be supported or adequately explained by management. Additionally, adjustments totaling $569.8 million were posted into the trade payable account balance, resulting in a decrease of payable balance. Appropriate supporting evidences for these postings were not provided for our review, and there were no alternative audit procedures we could adopt. Furthermore, we sent confirmation to a sample of payables and noted differences between the balance recorded in the general ledger and replies received from suppliers as detailed below. The differences noted were not reconciled by management. So these are at least Pura, GNPC, Atlas, and Electra Power. So what we are saying, they responded but with different amounts as what Nawec recorded. This resulted in limitations in ascertaining the completeness and valuation of the payable balances reported in the financial statement. Our report was signed on 22nd December 2021. DT Associate. Thank you. That's it.
Thank you so much. Can we proceed to the management letter?
Okay. The management report to management 31st December 2019. Yes. Page 3. The first point is on page 3.
I think in the report submitted to you, it's in the same document as the financial statements.
Page what?
What page will it be? It will still be
Page 5.
On yours, okay.
Maybe I should have it. That's the one that's.
I wouldn't know, I don't have that. I'm reading from my own.
It's in the.
No, I have my original. You have a different copy. I have to get yours.
It's in the same document as the financial statement. You have financial statements and management letter. That is why it's submitted to you. So you have to open the second part of that document and page 5. That's where she started. There are two. Report to management, 31st of December 2019. There's something separating that. Yes?
Where you see controls.
The clerk knows his.
Yes, you can proceed.
Okay. On controls, 1.2. 1.2.1 Audit Committee meetings. The Institute of Internal Audit recommends audit committees to meet at least 4 times a year to deliberate on critical areas relating to the committee's oversight function. During our audit, we requested for minutes of audit committee meetings for our review, but these were not provided to us. Implication: the effectiveness of the audit committee may be weakened, especially with regards to monitoring and meeting its responsibilities on the internal audit function, internal controls, and financial statements of the company. Recommendation: the audit committee should meet at least once every quarter to ensure that it provides effective oversight of the financial reporting and audit process, the company's system of internal controls, and compliance with laws and regulations. Significance high. Need to respond.
I'm trying to use my natural voice. Management response.
With your voice.
You can hear me, right?
Yeah.
Thank you. Yes. As disclosed in the response to this issue in the 2018 management letter, the board was dissolved by government on the 30th of August 2018, and a new board was constituted late 2018. The new board had their first meeting in January 2019, and the board committees were formed in the second quarter of 2019. The board audit committee was chaired by the then chairperson. The committee held only one meeting before the resignation of the vice chairman in June 2019. In that meeting, the committee only reviewed the committee charter. The committee remained dormant after the resignation of the vice chair in 2019 until May of 2020, when the board managed to recruit a new member to chair the Finance and Audit Committee. The reason for the long delay was the fact that the board was focused on identifying a replacement with strong finance and audit background.
1.2.2 Control on expenses. From our test of controls on procurement, We requested but were not provided with evidence to confirm that the transaction below was procured in line with the company's procurement policies and procedures. There is a breakdown here of rehabilitation of Banjul CR4 and the details. Implication: the company may not be complying with the relevant internal procurement policies and procedures, resulting in potential inefficiencies and economic losses to Nawec. We could not confirm that the contracts committee was involved in the procurement as required by the procurement guidelines. Recommendation: management should ensure that provisions of the procurement policy are adhered to all times for all purchases to ensure efficiency and effectiveness in its processes. Significance high.
The Banjul Rehabilitation Project was discussed and approved by the Board of Directors in one of their meetings. However, no resolution was circulated to the effect. The only proof of the approval is through the minutes from the meetings.
1.2.3 Budgetary Control. We were not provided with evidence of monthly variance analysis with explanations for the differences noted between the budgeted and actual expenditures incurred for the period under review for the expense lines highlighted below. Implication: the absence of proper budgetary controls could lead to unsustainable deficits. Significant adverse variances in expenses implied that management is spending more than planned. Recommendation: management should endeavor to spend within budget. Monitoring actual expenditure against budgets should be enhanced and done on a periodic basis and reviewed to ensure that activities are in line with budgets. Significance medium.
Management has implemented a budget monitoring system which requires all procurement requests to be approved by the finance budget officer, the finance director, and the managing director. This is a preventative control. Management acknowledges the fact that there is significant weakness in the implementation of the control, and it should be complemented with a budget variance monitoring control. Management has therefore taken steps in 2020-2021 which include decentralizing the budget responsibility and making each department responsible for all aspects of their budget for 2021, a bottoms-up approach to budgeting for 2021 financial year, ensuring up-to-date accounting data from the beginning of 2021 to be able to provide budget variance reports for budget follow-up purposes. Management expects these processes and its efforts to be significantly complemented by the implementation of the new ERP system, which aims to automate a significant amount of the processes and controls which are prevalent up to November 2020, when the new system went live. The implementation and the development of processes and controls around financial reporting and cost control is ongoing and will continue. 2022 will be the first year Nawec will have a proper tool for performing budget control, which has audited. Management is optimistic that this situation will be greatly improved by the new year.
1.2.4 Fixed Assets Verification. As per the company's policy, fixed asset verification is to be carried out once every year. We noted that a verification was done by the Finance Department in 2020, reviewed and approved by internal audit. However, only motor vehicles and motorcycles were verified. The rest of the asset portfolio of Nawec were not verified. Furthermore, we noted that the assets recorded in the fixed asset register were not coded for ease of reference and identification. As a result, we could not physically verify the existence and condition of some fixed assets. Implication: the absence of verifying the entire assets of company is a breach of the policy. There is a risk that assets recorded in the fixed assets register may not physically exist and potentially misstating amounts and balances reported in the financial statements. Without the relevant controls on fixed assets, which includes coding and verification, the risk of asset pilferage and waste is heightened. Recommendation: verifications of fixed assets should be done in line with the company's policy. Management should ensure that all assets are coded and periodic fixed asset verification is carried out to help identify all missing assets and take steps to recover them or to remove them from the fixed asset register in the event that they could not be located. Significance high.
Management acknowledges the fact that this is a significant issue that needs attention. As the auditors can also attest, the process of cleanup started in 2019 with the reconciliation of the detailed fixed assets register to the balance sheet, which is carried in the financial statement. The next step is to plan and perform a countrywide fixed asset verification. We expect this process to be kicked off in the third quarter of 2022. when we expect to have normal operations of all finance functions after the restructuring and close to a year with the implementation of the new ERP system.
The company's policy states that monthly reconciliations between the nominal ledger balance and the individual creditor listing balance should be conducted. From our review, we noted that monthly reconciliations between the nominal ledger balance and the individual creditor listing was not conducted as stated in the policy. This resulted in differences between the two data not reconciling. We also noted that most of the invoices from suppliers were not posted into the system on time in line with accrual accounting. Invoices are normally posted into the system after payments are executed. This has resulted in significant adjustments noted through the income statement during the year under review. Implication: the absence of accurate and timely reconciliations between the two ledgers could lead to misstatements in the payable balance reported in the financial statements. Posting invoices after payments increases the risk of errors and posting invoices in the wrong accounting period and consequently misstating the expense and payable balance reported in the financial statements. Recommendation: management should ensure that monthly reconciliations between the nominal ledger and individual creditor listing is done in order to minimize errors and ensure compliance with the policy. Management should review all invoices and ensure that they are recognized as import in line with accruals and matching concept and principles of accounting. Significance high.
Management acknowledges the flaws in the internal control over financial reporting in 2019, which also prevailed all through 2020 and 2021. This is definitely a key priority area for the finance team, and the process of designing these controls are well underway, and implementation of periodic reconciliation of all balance sheet accounts will be implemented starting January 2020, when we expect the full functioning of the new ERP system with all integrations stabilized and working smoothly.
1.3 Accounting, auditing, regulatory issues. 1.3.1 Cash and bank reconciliation. Long reconciling items. During our review of the bank reconciliation statements, we noted outstanding reconciling items, which consist of uncredited deposits and outstanding checks that were not deposited or presented to the bank up to June 2020. These are summarized in the table below. Samples of detailed exceptions also noted are listed below as well in the table. And cash and bank supporting documents. We selected samples of outstanding checks from the bank reconciliation statement in order to test the completeness, accuracy, and cutoff of the outstanding checks as at year end by reviewing the check stock or as an alternative the bank statement for evidence of clearance, but these were not provided by management for our review. Details of the exceptions are highlighted below. Overdraft accounts. We also noted with concern that the company is maintaining an overdraft balance of 77.2 million, whilst the cash at bank balance was 836.3 million. Implications: the long reconciling items could result in misstatements of the cash and bank balances and other related account balances such as receivables, fixed assets, and expenses, etc. It is concerning to note that the deposits made to the bank were not recognized up to the time of reporting, implying potential irregularities. Lack of adequate supporting documents makes it difficult to ascertain the occurrence and completeness of cash and bank balances. Overdraft facilities are expensive as it attracts high interest rates, increasing finance costs for the company. Recommendations: management should continuously monitor the reconciliation process to ensure that long reconciling items in the cash book are cleared and adjusted regularly to minimize the risk of fraud and errors. The unreconciled differences, particularly deposits made to the bank and not seen on the bank statements, must be investigated and corrected as soon as possible. Supporting documents for transactions posted in the general ledger should be filed and referenced for easy retrieval. Management should consider paying off the overdraft facility, considering that the company has a huge cash balance that could be used in its operations. Investment options with high yielding returns should also be considered. Significance high.
Management acknowledges the flaws in the internal control over financial reporting in 2019, which also prevailed in 2020 and 2020. This is definitely a key priority area for the finance team, and the process of designing these controls are well underway, and implementation of periodic reconciliations of all balances will be implemented from January 2020. Then we expect full functioning of the ERP system with all integrations stabilized and working smoothly.
1.4.1 trade receivables, we noted a credit balance of 76.9 million adjusted into the trade receivables general ledger account. From our further work and inquiries, we were informed by management that these were direct payments made into the company's bank accounts by customers. However, there were limitations in identifying customers to update individual accounts in the billing system, as there are no references to identify the relevant customers. Customer statement. During our audit test of the trade receivable account balance, we requested for customer statements for a sample of totaling 159.8 million. However, we encountered limitations as the system could not generate the statements. Details of the samples selected are detailed below. Aging analysis. During our test on provisions, we noted that the system is limited in generating an age debtor analysis, especially for the purpose of provisions for bad and doubtful debts. Management applied a flat rate of 15% as stated in the company's policy in all its outstanding receivables as provisions irrespective of age of debt. 1.4.3. Unsupported balances. We could not test the existence and valuations of the following account balances as we were not provided with adequate supporting evidence to substantiate the transactions posted into the ledger. The accounts affected are highlighted below. Confirmations. We sent confirmation to a sample of customers and noted difference between the balance recorded in the general ledger and reply received from GTSC as detailed below. The difference is yet to be reconciled or adjusted by management. Implication. The absence of timely follow-ups with banks in identifying customers could lead to customer accounts classified as non-performing and provisions charged as a result. The absence of customer statements is a limitation to our audit, and considering that the balance of the sample selected is material, this has resulted in the receivable account balance with a balance of 159.8 qualified in our audit opinion. The provisions charged to the trade receivables using a flat rate of 15%, irrespective of age of debt, could result in understatement of the net receivable balance reported in the financial statements. The difference noted for GTSC implied that the receivable balance may be overstated. Recommendation. Timely follow-up should be done with the banks on unknown deposits in the bank statements, and management should ensure that all customer accounts are updated. Management should ensure that all transactions with customers are posted into the individual customer accounts and subsequently into the general ledger, ensuring that customer statements are generated from the system at any given time. The billing software should be reviewed by management by engaging the developers with the possibility of adding a functionality to enable the system generate an age debtors analysis going forward. Significance high.
Management response. Management acknowledged the flaws in the internal control over financial reporting in 2019, which also prevailed through 2020 and 2021. It is definitely a key priority area for the finance team, and the process of designing these controls are well underway, and the implementation of periodic reconciliations on all balance sheet accounts will be implemented starting January 2022. We expect the full functioning of the ERP system with all integration stabilized and working smoother.
Order debtors. From our test of the order debtors account with a closing balance of $6.7 million, we noted that there were no repayments into the account balance during the period under review, and no provisions charged in recognition of non-performance as at year end. The affected account balances are detailed in the table below. We noted with concern that the company paid per diems to government officials, and these are still not recovered. We also noted that debtor balances relating to MSG and GUC companies taken over by Nawec are still included in the books of Nawec with the balance of 2 million and 2.9 million respectively. Implication. The involvement of the company in executing such payment is a departure from its purpose and objectives. The unsubstantiated receivable balances and absence of supporting documents is a limitation to our audit and would therefore impact our audit opinion. Recommendation. All account balances should be reviewed periodically, ensuring that balances reported in the system are appropriately supported. Management should desist from paying per diem to government officials and recognize impairment on all the non-recoverable balances. Significance media.
Management response is an other internal control issue. Management acknowledged the flaws in the internal controls of financial reporting in 2019, which also prevailed in 2020 and 2021. This is definitely a key priority area for the finance team. The process of designing these controls are well underway, and the implementation of periodic reconciliations on all balance sheet accounts will be implemented starting January 2022. when we expect full functioning of the ERP system with all integrations stabilized and working smoothly.
During our review of the staff loans account balance, we noted that the staff account highlighted below is not performing as no deduction was made towards the loan in 2020. We were informed by management that the staff was on secondment and we were not provided with evidence to indicate that arrangements are in place to ensure that the loan is serviced as agreed. That's the breakdown. Implication: this could potentially lead to financial loss. Recommendation: management should take steps in line with the loan policy to ensure that monthly deduction is made on staff loans.
As this is another internal control issue, the management acknowledges the internal controls on financial reporting in 2019. It also prevailed in 2020. We designated a key priority area for the finance team. The process of designing these controls are well underway.
It's Nawec, huh?
Look like Casper.
I like that.
We capture that in the contract.
It's Casper.
It's Casper, huh? But we can rest as well. This time is Nawec, huh?
Yes.
Okay, 1.6.1 trade payables. We sent confirmation to a sample of suppliers and noted differences between the balances recorded in the general ledger and replies received from suppliers as detailed below in the table. And 1.6.1.1, we noted a residual difference between the trade payable listing and the general ledger amount of 34.7 million, which could not be explained by management. And point 2, in reconciling the trade payable account by management, we noted manual journal postings made into the account totaling 569,895 net. Supporting evidences for samples of these postings were not provided for our review. Details are highlighted below. Implication: the differences noted between the confirmation replies and the amount recorded in the general ledger implies that the payable balance recorded in the financial statements is misstated. Difference between the listing and the general ledger could indicate that the payable balance reporting in the financial statement is not complete. The difference is material and has resulted to a qualification in the financial statements. Unsupported manual journals are an indication that creditors' records were not properly maintained or appropriately recorded, which could lead to misstatement of the account balance. The payable balances reported may not be complete or accurate. Recommendation: management should engage these suppliers and reconcile the variances noted between the balance recorded in the general ledger and confirmation replies. Adjustments should be made into the books if necessary. The difference noted between the listing and general ledger should be investigated and reconciled by management. Supplier statements should be regularly reconciled to the accounts payable listing to ensure that the accounts payable listing is updated and complete. All journals posted into the books of Nawec should be reviewed and supported. Significance high.
Management response is another internal control issue. Management acknowledges the flaws in the internal controls of financial statements in 2019, which also prevailed through 2020 and 2020. It's definitely a key priority area for the finance team, and the process of designing these controls are well underway. And implementation of periodic reconciliations of all balance sheet accounts will be implemented from 2020, when we expect full functioning ERP system with all integrations stabilized and working smoothly.
A memorandum of understanding (MOU) was signed between MOFIA, representing the government of the Gambia, and Nawec on 9th May 2018. The purpose of the MOU is to create a mechanism that assists in turning Nawec into a financially viable company and to set it into path of long-term sustainability and long-term loans. During our test, we noted differences between the loan balances recorded in the GL and amounts stated in the MOU. Upon further review and inquiry, we were informed by management that the balances recorded in the books of Nawec are the actual disbursed amounts, while the MOU records the total loan amounts. The difference noted are detailed below. And 1.7.1.1 loan balances detailing amounts disbursed to Nawec, repayments made to date, interest accrued, balance outstanding, etc. for loans maintained in the books of the company were not provided for our review. Implication: the differences noted above are an indication that the loan taken over by MOFIA as agreed in the MOU could be misstated and incomplete. In the absence of the loan schedules, the financial statements could be misstated if significant elements concerning the valuation of the loan, interest charges, and the annual repayment are not recognized. Financial loss, including legal and penalty charges, could be incurred in the event that the company could not meet its legal obligations. Recommendation: going forward, regular reconciliation should be performed between Mafia and Nawec for loans guaranteed by the government of the Gambia and disbursed through Mafia to Nawec. This will ensure consistent data between the ministry and the company. Loan schedules should be prepared for all existing loans to provide guidance to management on the overall obligations and commitments of the company and how repayments are planned and monitored. Significance high.
Management acknowledges flaws in the internal controls of the financial reporting in 2019, which also prevailed in 2020 and 2021. It is definitely a key priority area for the finance team, and the process of designing these controls are well underway. And the implementation of periodic reconciliations of all balance sheet accounts will be implemented in 2022, when we expect full functioning of the new ERP systems, with all integration stabilized and working smoothly. There are already plans underway for Nawec and Mafia to meet and reconcile loans which form part of the on-lending agreement, which are the only loans left on the books of Nawec after the implementation of the Memorandum of Understanding, which saw Mafia take over close to 75% of Nawec's debt in a bid to reducing the company's debt burden.
Share capital. An amount of $2.6 billion was included as additions for share capital during the period under review as per the signed MOU. However, evidence of updated memorandum of associations highlighting the share increment and notification to the Register of Companies was not provided for our review as required by the Companies Act 2013. Additionally, converting the debt relief of $2.6 billion could result to the company recognizing shares more than the authorized capital limit of $50 million at $10 per shares. Implications: not updating statutory records and documents to reflect the accurate shareholding of the company's shares increases the risk of legal disputes and might result in breach of Section 81 of the Companies Act 2013. Recognizing shares in excess of the authorized capital is in breach of Section 82 of the Companies Act 2013. Recommendation: the Memorandum of Association should be updated and the Register of Companies notified as required by Section 81 of the Companies Act 2013. Additionally, the additions for share capital should be posted into a temporal GL name order reserve map into equity until all mandatory processes are completed. The authorized share capital should be increased to accommodate the debt relief by the government for the purpose of capitalization. Due process for the increase should be executed as per Section 82 of the Companies Act 2013. Significance high.
Management response. Management acknowledged the compliance issues linked to debt conversion which happened as part of the debt restructuring in 2019. A team comprising of Nawec's legal and finance staff is already set to work towards regularizing these discrepancies and updating Nawec's memorandum and article of association. This is expected to be completed by end of January 2020.
Revenue 1.9.1. During our audit test on revenue, electricity sales, we developed an expectation by obtaining the monthly sales from the billing system Galati, multiplied with the approved tariff, added sales from Cash Power Suprema, and deducted Nawec's own consumption to arrive at our expectation. A difference of $199 million was noted between our expectation and the amount recorded in the general ledger. Detail of the exception is highlighted in the table below. Additionally, we encountered limitation in testing the completeness and accuracy of revenue as the meter logbook was not provided for our review. Furthermore, supporting evidence for revenue recorded for the Ajib Nawec service connection amounting to $10 million was not provided for our review. Implication: the difference noted above for electricity sale is an indication that the revenue amount recorded in the financial statement could be misstated. The difference noted is material and impacts on the audit opinion. The absence of the meter logbook makes it difficult to ascertain the completeness of the revenue amount. Lack of adequate and appropriate supporting documents for the Ajib Nawec service makes it difficult to confirm the completeness and accuracy of the transactions posted into the ledger and whether the right treatment was applied in processing such transactions. Recommendation: the difference noted between our expectation and the general ledger should be investigated, reconciled, and adjusted by management. Meter logbooks should be filed in and made accessible for reviews. All transactions posted into Ajib Nawec service account should be adequately supported and all documents properly kept and readily available for review. Significance high.
Management response. Management acknowledges the flaws in the internal control of the financial reporting in 2019. It also prevailed through 2020 and 2021. It is definitely a key priority area for the finance team, and the process of designing these controls are well on the way, and implementation of periodic reconciliations of all balance sheet accounts will be implemented starting January 22, when we expect full functioning of the new ERP system with all integrations stabilized and working smoothly. As part of the IMS is also a system for customer management called One-Side Customer Users, OUC. This system went live on October 25, 2021, and designed and implemented in such a way that the issues raised in these points are addressed.
1.10 Cost of sales. We noted an overstatement of $4.8 million for a transaction posted into the cost of sales account balance. The invoice recorded an amount of $534,000, whilst $5,384,000 was posted into the general ledger, as detailed in the table below. We were also not provided with supporting documents for the transactions detailed in the table below, totaling $29 million. From our sample, we also noted journal postings of $134.8 million in cost of sales general ledger, not supported as detailed below. Implication: posting amounts different to what is recorded in supplier invoices implied weak financial controls and monitoring, resulting in misstatement of both the expense and payable account balances. Lack of adequate and appropriate supporting documents makes it difficult to ascertain the occurrence and accuracy of the transactions posted into the cost of sales account balance and whether the right treatment was applied in processing such transactions. The unsupported transactions are material and could impact the audit opinion. Recommendation: the financial supervision and monitoring should be improved. All transactions posted into the accounting system should be reviewed and authorized by senior staff in order to minimize such errors going forward. All transactions should be accompanied with adequate third-party supporting documents and readily available for review. Significance high.
Management response. Management acknowledges the flaw in the internal controls over financial reporting in 2019, which also prevailed all through 2020 and 2021. This is definitely a key priority area for the finance team, and the process of designing these controls are well on the way, and implementation of periodic reconciliations of all balance sheet accounts will be implemented starting January 2020, when we expect full functioning of the new ERP system with all integrations stabilized and working smoothly. The transaction workflow for procurement to pay is designed in such a way as to reduce the risk of manual intervention and posting of transactions directly into the general ledger, which is the main cause of the issues identified in this point.
1.11 Impress. During our review, we noted with concern that an amount of $960,000 relating to unretired Impress was written off in the income statement. Implication: late retirements may result in mismanagement and abuse of funds. Recommendation: management should ensure that all advances given are retired after the activity is completed and within the specified time. Significance high.
Management response. For the purpose of clarity, the write-off of interest being highlighted relates to transactions from as far back as 2014 all the way to 2020. All interest outstanding from 2019 to 2021 were followed up and cleared during the review of the accounts in 2019 and 2020. This work was quite tedious and time-consuming, and we therefore, based on cost-benefit analysis, did not go into the review of the balances older than 2010. It is, however, important to note that the experience from the reviewed balances in 2019 to 2021 revealed that a good number of the balances were retired, but it was not reflected due to errors in posting. There were, however, instances where staff did not retire, and when contacted, provided supporting documents, and some few also had to pay back cash they did not spend on or retire. Management acknowledges the flaws in the internal control over financial reporting in 2019, which also prevailed through the 2020 and 2021. This is definitely a key area for the finance team, and the process of designing these controls are well on the way, and the implementation of periodic reconciliations of all balance sheet accounts will be implemented starting January 2020. we expect full functioning of the ERP system. Sorry, when we expect full functioning of the new ERP system with all integrations stabilized and working smoothly.
1.12 Balances confirmed by bank. During our review of the bank confirmation replies, we noted balances confirmed by the bank not recorded in Nawec's books. Upon discussion with management, these balances were adjusted accordingly. However, these were not reconciled as at the year end. The list goes in the table. Implication: the omission noted above could result in misstatement of the financial statements and misuse of company funds. Recommendations: management should do a review of all its bank accounts and ensuring that all are accounted for. Financial controls and monitoring over the cash and bank management should be improved. Significance high.
Management response. These omissions were a result of the new account, USD cash collateral, opened in 2018, but not included in the financial at the time of the opening. With the
cash power.
I think I
Cash
changed
power.
Maybe change over. Change over. Procedure.
I'm learning, huh?
Yeah, change over now.
Okay.
Okay.
Okay. May I proceed? These omissions were a result of new accounts, USD cash collateral opened in 2018, but not included in the financials at the time of opening. With the other three accounts, they were in fact in Nawec's financials, but were written off in 2018 and 2019 respectively, based on the fact that letters were sent in 2018 to instruct the banks to close these accounts. It appears, however, that the banks never respected these instructions, and Nawec never followed up to confirm the accounts were closed and funds duly transferred as instructed. The reason this issue persisted without being caught, however, is the lack of proper internal controls over financial reporting, as discussed in point 2. Management acknowledged the flaws in the internal controls over financial reporting in 2019, which also prevailed all through 2020 and 2021. This is definitely a key priority area for the finance team, and the process of designing these controls are well on the way, and implementation of periodic reconciliations of all balance sheet accounts will be implemented starting January 2020, when we expect full functioning of the new ERP system with all integrations stabilized and working smoothly.
1.13 Operating expenses. During our review of administration expenses, we were not provided with supporting documents for the transactions noted below. Implication: lack of adequate supporting documents makes it difficult to ascertain the occurrence of the transactions and whether the right treatment was applied in processing such transactions. Recommendation: all transactions should be accompanied by adequate third-party supporting documentation, and all documents should be properly kept and readily available for review. Significance: medium.
Management response. Management acknowledged the flaws in the internal control over financial reporting in 2019. It also prevailed all through 2020 and 2021. This is definitely a key priority area for the finance team. The process of designing these controls are well underway, and the implementation of periodic reconciliations of all balance sheet accounts will be implemented starting January 2020, when we expect full functioning of the new ERP system with all integrations stabilized and working smoothly.
Confirmations. During the audit, we sent third-party confirmations to the banks, customers, and suppliers of the company. However, we were yet to receive any of the confirmations listed below. I think we can just say, before we signed, we did alternative tests, so it's not a big deal.
Lower.
Yeah, now it's low. At the time, implication: in the absence of confirmation replies, our audit work and conclusion would be limited as relevant supporting documents were not adequate in most cases. Honorable Chair, I was just saying that before we signed the final audit financial statements, we did alternative testing when we didn't get these confirmations. I just needed to clarify that. So it's not a big deal anymore. And on Fire ML, I would assume that the members will go through it and just pay attention to those that were not implemented, because it starts from 2016, I think. Whatever is not implemented from 2016 should still be in this report. 2015 rather, I can start from 2015.
Thank you so much. I think still we have some time. We can go through those annotations.
Okay, most of them are repeated again in the current year. That's why there are similar circumstances.
Okay.
Yes, they're similar. It's the same issues. The cash and bank not supported. It's the same issues. It's the same issue. Issues are similar. We have audit committees, came again, governance, board meetings. So, budget review, is the same, cash and bank is the same issues. Supporting documents again.
Thank you so much, madam. In your opinion, which ones are still there that are not implemented? Yeah, let's go through those that are not implemented.
Okay, if you go to page 31, page. I don't know if you are on the same page as
Just
mine.
give me the number.
2.2 in
2.2. That's page 32.
Okay. Audit committee meetings is similar to what we had raised previously. Then employees' job description, in one of the tests we did, the job description was not there, so it's not implemented. That's still happening. Lack of budgetary control, we've raised it in the current year as well. It's not implemented.
I want to take you back to the issue of the employee job description, because there the management and the HR committee disagreed with the findings of the auditor that all employees have job descriptions. It is part of their service. It is part of the service scope, just to clarify that. So there's a disagreement between us and the auditors.
Can I observe?
Yes.
At this stage, we are not considering.
No, but we have management response, no?
Yeah, that's why I asked her to lead us to those that
Okay.
are not implemented.
Yeah, but then let's
the
go through
management
them.
response can be done. Let's go through them.
Okay.
The argument is only going to be done when we are.
Okay. 2.5 cash and bank reconciliations. The similar was raised in 2019, not implemented. What page are you on?
36. 36. 35 and 36.
Okay, that's better. Okay.
I think we have a different document.
Yes, because now it's 46 on this one, isn't it?
36.
This one is saying 46.
That's why.
I think you are on the wrong one.
36.
Yes, let me go back. I'm trying to be on the same document as yours. Okay, then on page 37, the trade receivables. Similar to 2019, the unsubstantiated receivables and aging analysis was not implemented. On page 39, revenue, we noted the same discrepancies again, not implemented. 2.7 revenue. On 2.8, unsupported account balances for aqueous listing is partially implemented. $2.9, again, confirmations for banks, page 42, not implemented. Then looking at the management letter for 2017, page 43, 2.10, inventory reconciliation is partially implemented. No evidence of fixed assets verification, partially implemented in 2019. Trade receivables, 2.12, it's partially implemented, our observation. 2.13, staff loan building, the observation is, sorry, that one is implemented. Which one? 2.13 was implemented. So, cash and bank, which starts from page 46 through to page 49, partially implemented. And operating expenses, 2.17, page 50, not implemented. Page 50, 2.17, operating expenses. Not implemented. $2.18, the next page, 51, not implemented. Cost of sales. $2.23, page 55, opening balance differences, not implemented. And management letter 2016, page 56, cash and bank reconciliations partially implemented. Cash and bank again partially implemented on page 57. And on page 58, the observation on revenue, not implemented. Page 59, inventory, partially implemented. And same page, exchange loss, not implemented. Then the management letter 2015 is on page 60. The observation on induction training, not implemented, on page 61. Absence of monthly bank reconciliations, long reconciling items, evidence of review of bank reconciliations missing. Status not implemented, page 61. Inventory reconciliation, partially implemented. The reconciliation between the general ledger and billing system, not implemented, page 62. And then page 63, absence of age analysis report, not implemented. Page 64, finance department, partially implemented. Page 67, provision for bad and doubtful debts, not implemented, so same provisioning procedure was used. Page 68, property, plant and equipment, the observations not implemented. And long-term loans on page 69, partially implemented. Observation on interest payable on page 70, partially implemented. The observation on page 71, grant agreement, not implemented. Finally, on inventory, page 72, partially implemented.
Thank you so much. I just want to inquire whether the board chair has anything to say before we finally conclude.
Except not much, except that some of these things are historical data.
Okay.
And to make a proper analysis and get a good understanding of it, you have to go back up to 2015 and not coming back to this. So it's a little bit complex, but we have done what we could to sanitize these accounts with the support of the auditors, and I hope you will see it in that light.
Thank you so much. Once again, I want to seize this opportunity to thank the senior management and the entire team that are before us here. We really appreciate your cooperation. We are partners in development. The other side of you who are here to enhance one another in terms of value for money. Nawec is a very important public enterprise with a lot of expectation from our electorate and the entire country. So I know much has been done, but we also do our level best to make sure that we conduct that effective oversight so that there could be an improvement. On that note, I thank everybody, and we want to close this meeting formally until when we meet for consideration and final approval of the document. Thank you. Wednesday 10, you should come for the final consideration and approval or disapproval. It depends on how we are going to see it. That is Wednesday. Wednesday by 10, we have to be here. Thank you so much. Can any honorable member move a motion for us to adjourn till tomorrow, 10? Any seconder?
Yeah, seconded.
It has been moved and seconded that we adjourn the session till tomorrow, 10 a.m. prompt. Those in favor, please say aye.
Aye.
And those not in favor. No, this one we are formally closing. You are coming back, you are appearing on Wednesday.
You can see the strangers.